Okay, well, if it's all right to begin, I'd like to start right now. I've got a lot of great information to share with you today, and I want to welcome you to this presentation of the right way to trade tops and bottoms. This is a great edge I'm going to give to you today. I feel that too many people like to trade tops and bottoms in all markets, and they're doing it incorrectly. So what I'm going to do with you today is share a tremendous edge that you can start using as early as today. I'd rather you paper trade it and study it for a while, but if you'd like to, if you feel experienced enough, you can start using this edge as early as today, and you can actually apply it to any strategy that you're currently trading. Now, once again, I want to thank all the people at FXB for inviting me to speak. My name is Steven Primo. I am the president and founder of Specialist Trading, and we are first and foremost an educational website. As you'll see today, I'm going to be giving you a lot of great education, a lot of great tools and tips that I've accumulated in my 37 years of trading. These are things that I first started using over 30 years ago when I was struggling through my trading, and that I teach all my students and all of my members at Specialist Trading, because I teach and mentor all the things that I personally use that I've found that have worked over the course of 3 decades. Now, before we begin, once again, we are required to show you this, so please take a moment to view our disclaimer. I'm going to show you a lot of performance results on the correct way to trade tops and bottoms, but please remember that we can in no way guarantee that any of the results I'm about to share with you will be repeated in the future. And as you're taking a moment to view our disclaimer, I'd also like to mention that I'm a little bit different than most presenters. If you've attended my webinars in the past at FXB, you'll see that I love to take questions, but I like to take them at the very end of the class. A lot of times if we break up the webinar by asking and answering a question every couple of minutes, a lot of people lose concept of what I'm trying to teach to them. So let's wait till the very end. If you do have a question, kindly wait till the very end of the class, and then I promise I'll answer everything you have. Also, before we begin, I'd like to invite you to follow us on Twitter now. We give a lot of great free information, a lot of signals. Now, one thing I wanted to let you know is we posted multiple buy signals yesterday in the Australian dollar. And I just want to let you know, because of our proprietary entry techniques, you would not have entered into the Australian dollar. As you see, the Australian dollar is lower today. And so a lot of people have been emailing me or whatever saying, like, I thought there was a buy signal. Well, in order to learn how we enter and exit, you have to become a member of Special Trading. So we were not hurting the Australian dollar. In fact, we're not even long yet. We have to hit our entry point in which to enter it, and so we're okay. So I invite all of you to follow us on Twitter at SBCLST TRADG. And then lastly, I want to thank all the good people at FXB for inviting me to speak once again. I've been speaking for 2 or 3 years now with FXB, and I want to thank them for letting me participate. I want to thank all of you for attending. As you can see here, this is a link that they give you. If you can go to our microsite that they've furnished us. At the microsite, you see the link is rather long here, so we've abbreviated it in yellow. You copy this down, or you'll see a lot of information I believe they'll give you at the end of the presentation. And once you go to this microsite, you'll get a lot of more information about myself, about the courses that we offer, special discounts. So I invite all of you to go to our special link. Now, if you see there, Pro Trader Strategies, not to confuse anyone, Specialist Trading is where I mentor and teach the courses of all my classes. Pro Trader Strategies is our sister site where we actually sell and we promote all of our individual courses. All right, so why don't we begin? Remember, we are first and foremost an educational website. I'm going to give you a fantastic edge today that you can start using relatively soon in order to trade tops and bottoms. But please remember, we're more about empowering you with the information that I've accumulated in all my trading career. We're not about simply telling you, well, this particular currency pair or stock or future is oversold, so you should sell it, or this is over bought, or whatever, vice versa. We're more about showing you these things so you can actually learn them, so ultimately you won't have to rely on an outside source to make your decisions. It's been my experience, and I speak firsthand about this, that most traders lose because you are relying on an outside source to tell you what to do. Okay? Now, I know this once again firsthand because when I first started trading, I was listening to every news source. I was looking at all the news. I was looking at every indicator. We didn't have chat rooms or trading rooms back then, but the comparable thing was it was a newsletter, and I subscribed to all of them, and I wasn't making any of my own decisions. I was relying on someone or something else to tell me. So I couldn't make ends meet. It wasn't until my mentors said, Steve, to really let go of all that information and to trust things that have stood the test of time that really work. So that's what got my trading to turn around so that I was able to become consistent. And this is what I teach to all of my students. My goal is to teach you, not to trade for you, but to teach you how to trade with the specialist edge. Okay, so that's what I'm going to be doing today. Actually, in today's presentation, I'm going to teach you a fantastic edge. Once again, you can start using relatively soon. Just one last reminder for those of you who may have just joined the presentation. Remember, if you have any questions, please keep them till the very end of the course. Okay, this will roughly be lasting only about 30 or 40 minutes, and then we can reserve the last 10 or 15 minutes for questions. All right, so let's start out. The name of this presentation is The Right Way to Trade Tops and Bottoms. But before we begin, let's review how most people trade tops and bottoms. And remember, this doesn't matter what market we're looking at. It doesn't matter what time frame. This is how most people will trade tops and bottoms, and in any time frame, in any direction. Now, I'm going to start off by showing you a lot of older charts, so don't worry, these may be a year or so old, but I'm showing you for educational purposes so that you can see the examples perfectly. Then, at the end of the presentation, we'll go over current examples that are maybe a day or two old, okay? All right, so let's start off with stocks. If you're a stock trader or if you dabble in stocks as well as the Forex markets, let's look at an example here in Apple. This is an older chart in Apple, and what usually happens when you're trading overbought or oversold scenarios is that the most common way is to use an overbought, oversold oscillator. Now, in this example, at the very bottom of the chart of Apple chart, we have just your standard basic slow stochastic. And conventional wisdom tells us that here's the slow stochastics. Here is the overbought threshold. Roughly, I believe it's at 80. So when these two indicators go over the 80 threshold and then cross, this should be a selling sign. This is where you should short or sell. Conversely, when they're under or anywhere near around this oversold area, I believe at 20, this is when you should buy, okay? So if we apply this technique, and remember, it doesn't matter, you don't have to use the slow stochastic. This could be any overbought, oversold tool, okay? This could be any other oscillator. It could be the RSI, it could be a momentum tool. It doesn't matter. It could even be something that you've devised yourself. Anything that has an overbought, oversold area to it. So if we look at the example right here, we see here that when the lines crossed or when we were below the oversold area, this was the time to buy, and guess what? Apple went straight up after that. Then when the lines were in the overbought territory, way too overbought, well, it picked the top area when they crossed over, so you would have sold. So you had two really great trades in Apple in just about a month. This was the last year coming into Apple. So, well, boy, I ended the year fantastic. I got two great trades here. What a great way to end the year. I'm doing really well. Now, you see here that you've shorted it or sold, and then once again, we go back to the oversold area. So now it's giving you another chance to get in. So you're saying to yourself, boy, I'm going to become a millionaire by next year because this is just working too easily. So you buy, and actually it doesn't work as easily. It goes down a bit, but then it goes back up. So either you hold on because you're looking for the big gains now, and you're waiting for things to get in the so-called overbought territory. So you kind of wait, and then guess what? It turns and goes lower. But we are now in oversold again. So, you say, well, I had two great trades. I'm going to buy some more. I'm going to double down. So I don't need it to go as high in order to make a really nice gain. So you buy some more at the oversold area. You can try to pick this bottom here. And guess what? It doesn't even rally hardly at all and goes way lower until, in fact, you've given up everything you just made on those first two trades. And the next year is turning out terribly. Okay, so you thought you were going to have a great year the next year, and now you're actually in the hole. How about the E-mini S&P? The same concept can work if you're intraday trading or holding positions. If you look at the E-mini daily chart here, going back, we have the same concept, the overbought, oversold. We have two great trades here to go short and to go long. This is roughly about 20 points each or $1,000 each. So you're doing extremely well, and now you get another sell signal right here when the lines are over so-called overbought territory. So you sell. It doesn't really go lower, but it doesn't go that much higher. You decide to sell again, and look what happens. By this time, you've lost everything you made in the first two trades, and by this time, you're hiding the statements from your wife of how much money you've lost in the E-mini. Once again, we go to another market, the Forex market. Let's look at some older charts. Let's look at the dollar yen. Now, we all remember back about a year ago, and the dollar yen was going straight up. But if you're trading tops and bottoms, well, you see here that we were in a very overbought situation. We're above the so-called threshold, the lines cross. So this is your signal to go short. So you would have sold the dollar yen right here. And then it doesn't really go down, but it doesn't go up. So you kind of decide to double down. And look what happens. It goes higher. And if you decided to even triple down, well, you would have lost everything, because I can guarantee you that you wouldn't have had enough capital to hold on to this position. Now, you see how inconsistent this type of technique is. It works until it doesn't work. And then when it doesn't work, it's disastrous, because what happens usually is you give everything back that you made when it was working. In fact, it's similar or comparable to a gambling mentality. If you ever gone to a casino or to Las Vegas or Atlantic City and you play the slot machines, well, they're designed to give you this false sense of security that you're actually doing well. So they will give you wins every once in a while. So you have this feeling like, well, the bells went off, I'm doing well, I've made money. When in actuality, you've lost money over time, because there's no consistency. Every once in a while, you'll make a small win. They'll give back a little bit more. You'll make another small win, and you think that you're winning, but in actuality, you're not. Trading overbought and oversold is the exact same way. It doesn't matter what technique you use. If you want to use an overbought, oversold oscillator, if you want to use what someone is telling you in a trading room and some indicator that they've devised, some guru is telling you, overbought and oversold ultimately is a recipe for disaster. Why? Because you're going against the trend, because you're trying to swim upstream. And ultimately, it's going to come back. You may have 8 or 9 winning trades. It's always the 10th trade that you give everything back. And people have told me, boy, Steve, you're so harsh. How do you know about this? Well, I know firsthand, because this is the way I used to trade on the floor. My first year or two trading on the floor of the Pacific Stock Exchange, where I first began roughly about 35 years ago, I really, traded exactly this same way. I was trying to pick tops and bottoms, and I would have 1 or 2 winners, and I think, boy, this is easy. And then later on, I would give everything back. So the point is, I'm not trying to be harsh and tell you that there's no way to make money trading tops and bottoms. There are a lot of great traders that do that. It's just very difficult to trade that way. It's very subjective. They have some type of learning experience that they have an inner chart, whereas I couldn't do it, and I had been trading for years, and my mentors couldn't do it either. They said, Steve, it's much simpler, much more conducive to profits if you simply go with the current at your back, swim with the current at your back, as opposed to trying to pick a top and bottom. Okay, so that's why I'm trying to share this with you, this edge. Trading tops and bottoms is a recipe for disaster. Okay, just take it firsthand. It is a recipe for disaster. You will win until you stop winning, and you'll give everything back. So if we're not going to trade tops and bottoms, if I've shown you the way 99.9% of most people trade tops and bottoms, well, this presentation wasn't about, explaining the wrong way. Explanation was about explaining the right way. And so what my mentors taught me, they said, Steve, in order to trade the right way, you must first get this concept in your mind. And that is, there is no such thing as overbought or oversold. Any market can go as high as it wants to. There's no limit. It can go as high as it wants and continue. And any market can go as low as it wants to, down to zero. We've seen issues in stocks and futures go down to literally zero. And they accept worthless, or if you're trading options or futures. So anything can go down as low as it wants or goes up as high as it wants. So why try to tempt fate? There is no such thing as overbought and oversold. In fact, I would tell you right now to write that down on a little piece of paper and stick it up to your trading screen, and always look at that every day. There is no such thing as overbought and oversold. So there is no such thing, and there's no reason to trade overbought and oversold. Okay, this is what my mentors taught me. And the minute I fully understood this concept is the minute my trading started to become consistent. Okay, so we've talked about the wrong way. What is the right way? So when I finally understood this concept, and my mentors ingrained it in me, and I said, okay, you know what? I'm letting go. I finally understand. I'm not going to trade tops and bottoms. But what is the right way? Well, they said simply the right way to trade tops and bottoms is to go with them. That's how simple it is, just to go with these tops and bottoms. Now, when they told me this, I said, what does that mean? What does you mean go with a top or a bottom? Well, let's look back at the same examples we talked about earlier. Let's start off with Apple. We see here that we had Apple, and then Apple was going straight down. It wasn't going in our direction, and we tried to pick tops and bottoms. So in other words, we were out of sync. But how do we get in sync? Well, they taught me we have to add another indicator, another tool if we want to be in sync. And that is simply by adding the 50 period simple moving average, as you can see here. And what they said is, if price is below the 50 period, then you're only going to be looking for sell opportunities. You're either going to be on the sidelines or you're going to be selling, but you're not going to be picking a bottom, okay? I don't care what chat room or trading room you're in, what guru tells you in some presentation. If he says something is too low, you're not going to buy it because we are below the 50 period simple moving average. And then you're going to take your standard overbought, oversold tool, whatever oscillator it is, and because we're only looking to sell, we're going to look for those areas where we are in the so-called oversold area, okay? These four areas right here. And so what does this mean? Well, in these oversold areas, we want to look for the bottoms that were made, as you see right here in a horizontal red, okay? Now, there were other bottoms made. There was a short-term bottom made right here. There was another bottom made right here, but they didn't correspond to being in the oversold territory. We only want to see those bottoms that were made in the oversold area circled in red. Why? Because if these bottoms are violated, this is where you want to sell. This is where you would have sold at all of these places in Apple. And see how it's much more conducive to being in sync with the trend. So this is where you're going to be selling. Remember, we're just giving, this is not a strategy. This is just a technique for entering in sync and trading a top or a bottom. How about the E-mini S&P? Well, we talked about that same exact thing where it went straight up when we're trying to pick a top. Well, the first thing we do is we add a 50 period simple moving average. And we ask ourselves, where is the majority of price in relation to this 50? Obviously 50 is above, so there's no way we're going to short the E-mini. We're only going to look to buy it. Why? Because it's above its average. I don't care what any chat room is telling you. You're not going to sell the E-mini if it's above its 50 period, or anything for that matter, any currency pair, any stock, it doesn't matter. And so now that we know that we're going to be buying only the E-mini, we look for those so-called overbought territories, okay, circled in green here on your oscillator. And we want to see in each one of these overbought areas where a short-term top was made. Well, right here, okay, right here, right here, right here. We have all these short-term tops. And the way we take advantage of that is we simply look to buy when these tops are violated. You see how you would have actually had a profitable first couple of months of 2013 had you used this technique, as opposed to trying to short it and say, oh, you know, this guy I follow in his trading room says that it's tremendously overbought. We have to short the E-mini. It's never been this high before. It's been in overbought territory for the last week or two. Doesn't matter. If price is above the 50, we look for buy situations only. And then lastly, the Forex markets, the dollar yen. We all saw how the dollar yen went straight up. We've seen other currency pairs go straight up. Well, remember, the first thing we do is we say, where is price in relation to the 50 period simple moving average? It's safe to say that the dollar yen was above the 50 this entire time, even though you can't see all of it on the screen. So I don't care what guru you're following, what trade master you're following, the market itself, not an outside source. Remember, we rely too much on outside sources telling us what to do, but the market is telling you not to sell, but to look for buy opportunities. That's all you're going to be doing, okay? Remember, I started this presentation by saying the reason why most traders lose is because you rely too heavily on an outside source telling you what to do. You should have the information and the tools at your ready so that you can make your own decisions and empower yourself. That's what we do at Specialist Trading. So since we are above the 50 period, we're only going to be looking to buy. So now we go to the so-called overbought territories of the dollar yen. We find them right here. And then we look for all those tops that were made. And remember, it has to be a top that was made in an overbought area. Here's an overbought. I mean, here's a top, but we weren't in the overbought area. It has to be once the oscillator is above, and it could be any technical tool you decide to use. And then once these tops are violated, exceeded, that's our area to buy. Now, before, you would have literally gotten killed trying to pick a top in the dollar yen. But look how much money you would have made just going with the top and buying every time it was exceeded. All right, so now those were those were older examples so that we could explain the concept to you. So now I'm sure you fully understand it. Let's look at some current examples, things that happened within the last couple of weeks, even the last couple of days. We start out with stocks once again for those people who like to also trade stocks. XLNX, very popular stock. Where is price in relation to the 50-period simple moving average? Price is above. So we're not going to even consider going short this stock. We're only going to look for buy opportunities. Now we want to look for those so-called overbought territories. They're right here. All right. So every time a top was made above there, we'll draw that little green horizontal line. Okay. And if we exceed that, that's where we buy. Look at all the nice profits you could have made all the way going up here. Remember, though, this is not a strategy. In order to have a strategy, you have to have all the other pieces of the puzzle, like stop placement, where you're going to exit, money management. We're just showing you a great edge, a technique to trade tops and bottoms. This is an entry technique. How about Twitter? Okay, Twitter has actually been going straight down. Well, you didn't need to listen to an outside source. You didn't need to watch TV or subscribe to some trading room to find that out. All you have to do is plot a 50-period simple moving average. And if it's below, you're only going to be wanting to sell. So you're not even worried about Twitter going higher. You just want to go short it. Then we look at the overbought, oversold tool, and we look for all those places where we're in the so-called, conventional wisdom tells us we're oversold, even though we know there's no such thing. And that's where we look for these short-term bottoms. And once these bottoms are violated, guess what? That's where you're selling. Really easy, huh? Do you see how going with the flow, swimming with the current at your back is much more conducive to being consistent as opposed to trying to stand in front of a speeding train and saying, you're going to stop right here. I mean, that's really silly. And I know firsthand because that's exactly the way I used to trade. How about the E-mini? Well, let's look at, first of all, an hourly chart going back to the beginning of April. We see here that we were below, but then we crossed above the 50 period starting on the 31st of March, about 2 or 3 weeks ago. So from here on an hourly basis, we are only going to be looking to buy. We're not going to consider shorting. A lot of news came out, worries about what's going on economically, earnings, worries about what's going on in the world, in Chechnya. We don't care. The price is above the 50 period. We're only going to be looking to go long coming into April. So we got our oscillator. We saw the so-called overbought territory. And then we look for those tops that were created all along here. And look where you could have bought the E-mini, all of these places, okay? These were all entry signs and triggers to enter, not to go short. You can go on a 5-minute time frame, okay? Remember, this technique just doesn't work for daily bars. You can use this on a monthly bar, a weekly bar, a 4-hour bar, a 5-minute bar, as you see right here. Here's the E-mini. And as we crossed over on the 10th, this was just a couple of weeks ago, we crossed over in the first hour of trading below the 50-period simple moving average. So now we're only looking to go short. I'm sure someone during this day would have said, wow, the E-mini is really falling out of bed. You have to pick a bottom here and try and buy it. Nope, we're not going to try and buy the E-mini at all. We're only going to look to go short. Why? Because at this point, it crossed below the 50-period simple moving average. So now we go down to this so-called overbought, oversold tool. We find all the areas where it was in the so-called oversold territory, circled in red, and then we look for those bottoms that were made. And once these bottoms are exceeded to the downside, that's where you sell. See what kind of a great day our members had using this technique at specialist trading? All the E-mini traders had a great day on the 10th, where I know some people said, boy, I got killed today because the market kept going lower and lower and lower. Well, that's because you're trying to pick a bottom. Never, ever try to pick tops and bottoms. All right, let's look at the Forex markets now. This is a Forex course, and I just want to show you how this applies to everything. Let's look at the Australian dollar. This was coming into the second week in April. We see here the Australian dollar is above the 50-period simple moving average. So what does this tell us? We're not in any way going to consider shorting the Australian dollar. I know the Australian dollar is down today. We're not even going to do that. We're only looking to buy the Australian dollar. So instead of shorting it, we go to the tool and we see the areas where we were in the so-called overbought territory. And we look for the tops that were made right here. So we kind of had this congestion right here. And look at all the areas you could have purchased the Australian dollar, all right? It went up roughly about 150 pips at this little congestion right here. So this was a nice trade you could have had the first week of April, just a couple of weeks ago. You would have been long the Australian dollar. How about the Swiss franc? A lot of people are saying, well, there's not a lot of volatility in the Swiss franc. It's the lowest it's been. The dollar franc, I don't really trade that. It doesn't, hey, we don't listen to outside sources. Remember, don't worry about those things. Those things are only going to serve to keep you from being consistent. If price is below the 50 period simple moving average on this 4-hour chart, that's where we look to go short. Now, even though we kind of oscillated back and forth here, we created a little bottom right there. So let's go to the overbought, oversold oscillator. Right here, you can see we're in the so-called oversold area. So since we're looking to go short, let's look for those bottoms. And there was a bottom created below the 50. There was another one here, another one here, and here. Look at all the places you could have sold the Swiss franc. People are saying, well, I don't really trade the Swiss franc. There's not a lot of movement. It's no volatility. I don't get a lot of signals. Well, if you're an intraday trader, you could have been short this entire time here until your strategy exited with a profit, or else you got stopped out and it's time to move on. Now, there's two important points to remember. Please remember, this is not a full-fledged strategy, because I know when we get to the question and answer portion of today's class, you're going to say, well, where do I place my stop? Steve, where do I exit? Steve, how many contracts or how many shares or how many lots should I trade? Those are all great, important pieces of the puzzle that we offer in our courses. I just showed you a tremendous edge on how to stay out of trouble, okay? So these are great ways on how to stay out of trouble and go with the flow as opposed to trying to swim upstream. So these two important points I want you to remember are, first of all, the same thing my mentors taught me. Please write this down and put it on top of your screen, your trading screen, so that you never, ever pick a top or a bottom again, because there is no such thing as overbought or oversold. Okay, there's absolutely no such thing. I know everyone's going to try to convince you of that, but the reason we say that is to keep us from trading this way. Why? Because it's a recipe for disaster. I'm not saying it doesn't work. It does work until it stops working. And usually when it stops working, that's when you just started to trade this way and you give everything back. Okay, and a very, very large loss. So I don't want this to happen to you. Remember, we're an educational company. You can see all the attention I give to detail and trying to teach you and my students. I don't want you to go and lose money. I don't want you to go into a large drawdown so that you don't have enough money to trade. The things that I teach my students and my members and the people in the presentations are actual techniques that I use, hopefully will sustain you for the next 10, 20, 30 years, okay? So please, if there's one concept I want to leave you with, is there's no such thing as overbought or oversold. I fought and resisted this for months, if not years, until finally I just gave in and said, okay, I'm not going to trade tops and bottoms anymore. It's not worth it. I almost lost my job trying to trade tops and bottoms. It just doesn't, it's not worth it in the long run. So that's the first thing that I want you to remember. The second thing is, if there's no such thing as overbought and oversold, obviously, never, ever try to pick tops and bottoms, ever. It's a loser's mentality. It's a gambling mentality. It's similar to playing the slot machines. It will give you this false sense of security that you're winning, but over time, you're actually losing, okay? You start out with $100 playing the slot machines. Every once in a while, the bells go off. Hey, there's some more money coming in. But if you look after the next 2 or 3 hours, you actually maybe only have $25 left. And you thought, boy, I thought I was winning. Actually, you're not, because it's just slowly whittling away. And you have these winners every once in a while. You don't believe me? Look at your own trading. Ask yourself, how well is it doing? How well are you doing trying to pick tops and bottoms? You have these nice winners, excuse me, and then ultimately you give it all away. It's very similar. Once again, I'm not trying to pick on anyone or any concept or any educator. I'm speaking from firsthand experience. All right, let me just take the last few minutes before we get into question and answer to invite you to become members of Specialist Trading with a great, great offer we have. This is a presentation, a video seminar presentation of what I gave last year in Detroit. I was asked to speak to a bunch of traders in Detroit, and they spent hundreds of dollars coming to see me speak. These were training sessions I gave to them over the course of a weekend. I gave many more trading edges just the way you saw today. This was just one edge. There were over 5 of these types of edges in this special video seminars, okay? Such as indicators not to use, the difference between a system and a strategy, the #1 chart pattern you should be trading on, techniques for being on the right side of the market. In addition to this, in the video, I gave all of the complete rules to probably one of my most consistent strategies. It's strategy #1. I gave all the core rules, entries, exits, stops, how to trade, this strategy. This is all included. I'm inviting you to purchase this. This is 3 hours of trading techniques plus a full strategy. Now, usually we offer this on our website for nearly $1,000, but guess what? For all the people attending today, you're not going to believe this price, $37. We're going to give all of this to you, all the tools, all the techniques, edges like you saw today, but roughly 5 or 6 more of them in different categories for trading any market, any time frame for only $37. But remember, this is for a limited time only. This is just for the attendees today at the FX Street. Now, we're also giving you, in this 3-hour video webinar, we're also giving you all the complete rules with plenty of examples to strategy number 1. And just to show you that this is not some type of throwaway strategy, our members took these signals in the Australian dollar just a little over a month ago. These were all buy signals using strategy number 1 in the Australian dollar, okay? These were all buy signals on the 3rd, the 12th, and the 20th. And if you want to go on a 10-minute time frame, on the 21st, which was Monday, these were 2 signals to go short the euro dollar on a 10-minute time frame. So this is a great strategy, strategy number 1 that you'll be able to begin using right away. I give you all the rules and show you how to trade it, included with all the edges that I shared with you today. So if you go to our website, you'll see this advertised for nearly $1,000. We're giving it to all the people today for a discounted price of $37. So if you're interested, here's how to take advantage of this. You can go to our sister site. Once again, that's protraderstrategies.com. Or the best way is just to simply email us. Email our VP of Operations, Brett Marsh, at brettm@specialisttrading.com, or call us directly at 310-844-7220, and we'll send you that video series for only $37. Once again, you get the complete rules to one of my best strategies. You see the signals that were just generated in this last week. And you also get all those edges and all that different free information. Okay, it's a great discount, great way to learn for only $37. But remember, for a limited time only. All right, I want to thank all of you for taking the time to ask any questions. Let me open up the chat box here. And if I could just expand it, I'll try to answer each and every one of your questions. I get my glasses. Let me just see here. Okay. DZ Bisa is saying indicators by themselves can be overbought, oversold for much longer and does not work in range bound markets. It's good only for range bound. I think you're just making a statement, I guess. Yes. First of all, I used a overbought, oversold stochastic oscillator. If you're asking what the settings were, I just took it from the standard charting software and used the default program. It was a slow stochastic. I didn't even edit anything, so I didn't look at what the settings were. When I punched up slow stochastic and was plotted on my screen, I believe the overbought was at 80 threshold and the oversold was at 20. So just go to your whatever charting software you're using, use an overbought, oversold oscillator. It could be the RSI, it doesn't matter. It could be a momentum oscillator. It could be something that you currently use that you made up, some indicator you made up where it shows overbought and oversold. Doesn't matter. Since there is no such thing as overbought, oversold, we are exploiting these areas where they're telling us it's overbought, oversold, and we're simply going long or going short when we exceed those tops or exceed those bottoms, okay? So I just used a very basic slow stochastic. The overbought threshold was 80, the oversold was 20, okay? I didn't even go into the edit, so I can't tell you what the actual settings were, all right? DZ Beast is saying, sorry, I mean, it's not good for trending markets. Well, yes. Well, that's what if you're trading the Forex markets, they are the best trending markets out there. They're better trending than the E-mini. They're better trending than stocks. So why would you want to try and pick a top and bottom in the most astounding trending markets? You wouldn't want to do that. So it's the same way. But trust me, I'm not saying that trading tops and bottoms will not generate gains every once in a while. They will. But usually when they don't, as you saw in these examples, they're disastrous and you give everything back. So, as traders, why would you want to trade where your P&L looks like a roller coaster, where it's going straight up and then goes straight down? You don't want that. You want a more consistent approach to your trading where you look at your profit and loss statements. And if you have an equity chart, it's like 2 steps forward, 1 step back, 2 steps forward, 1 step back, where the equity chart has a nice upward slope. That's what we're trying to instill in all of our members. And that's what I try to do with all of my students. Now, that's if you use the multiple edges and techniques, which I described in that video session, that seminar I taught, these will help you get onto that road to consistency, okay? Let's see. How do you handle economic release and central bankers' opinions? That's a great question. I don't. This is another thing that was taught to me on the floor. I never, ever look at any news, okay? I've been trading for 37 years. I never, ever once concentrated on news once my mentors told me to give that up. And here's a great example. I was watching my mentor. He was a specialist on the floor as well. And I was watching him one time, and as you know, specialists were those guys that stand behind the pillars, and there's paper all over the floor. And if you wanted to buy or sell a stock or an equity, you would have to go up to the person who specialized in that. Okay, that's why they got the name specialist, because they specialized in, say, IBM or say US Air or say Apple. These were the specialists in those stocks. So you had to and conventional wisdom said that they needed to know everything about the stock. That's the way I was trained. I thought, well, I should know what the company does. I should know everything about it. I should know the earnings. I should know when economic news is going to come out that's going to affect it. So that's the way I was taught, and that's one of the many things that complicated my trading. I remember standing by my mentor who taught me to let go of all these things because they were getting in the way of my success, including news. And I couldn't believe it. I said, "You don't listen to any news?" He says, "No." And then I remember a broker coming up to him one time and saying, he traded waste management at the time. And he says, "You know what the earnings are going to be in waste management? The company is releasing the earnings in the next day or so." And the specialist said, "No, I don't." And the broker said, "You don't know what the earnings expectations are? This is the company you trade." And my mentor said, "No, I have no idea, nor do I care." And the broker was just flabbergasted. I said, "Why wouldn't you care? Isn't that going to affect your trading? Isn't it going to help you to know what these announcements are so that you can not be caught off guard?" And then my mentor said, and I'll never forget this, he said, "Listen, if I'm walking down the street and it starts to rain, do I need someone to tell me that it's raining? No, because I can tell for myself. I can see the water coming down. I can see I'm getting wet. My clothes are getting wet. All I need at that time is an umbrella or shelter. I don't need someone to tell me." And he said, that's the same way with news. If, regardless if news comes out or whatever the announcements are, economically, whatever, you'll see what is happening by the chart in front of you, comparable to seeing the rainfall. So you'll react off of that. You don't need to know what the news is or why it did this, because all we're trading is the chart. We're not trading the news. So if the news was good, how many times have you seen good news and the stocks or the currency pairs go straight down, and vice versa? And then how many times have you seen when the news is supposedly good and it goes straight up? So it's very difficult to comprehend and to try to bet what it's going to do. The best way is just follow what it's doing. If it's going up, then okay. If it's above its 50-period simple moving average and it's going up, I only want to be buying. If the news comes out and it goes straight down and it's below its 50, well, I only want to be selling. That's all you need to know. There's no reason to overcomplicate your trading. When you overcomplicate your trading, you are seriously diminishing your chances for becoming successful. If you look at traders that have been trading for 5, 10 years, most of their trading plans are extremely, extremely difficult and extremely subjective. I know a lot of traders and mentors say, well, we trade indicators, we trade overbought, oversold, we trade different charting markets. And then they have all these plans and they're, it's like, well, some person will see them and another person won't. In other words, one of my students once said, boy, I used to trade overbought and oversold. Half the time I would look and another trader was saying it was overbought, while the other one was saying it was oversold. We want things that are more cut and dry. If you see the stock, if you see the currency pair going up and it's above its 50 period, well, then you only want to be a buyer. That's it. It's that simple. Okay. We don't want discretion where someone can say, well, this is support. And the other person says, no, this is resistance. It's too up in the air. Some traders make really good money trading that way, but it's too discretionary. It's too subjective. We want things where everyone will see the same thing at the same time. Okay, where is price in relation to the 50 period? It's above. Okay, you can't have two different opinions of that. It's above, so you're a buyer. If price is below, you can't have two different opinions of that. It's below, so you're only a seller. Once you simplify your trading, you will get on that road to consistency. Remember, I started the presentation saying that the reason why most traders fail, I know firsthand because we look for outside sources to tell us what to do. That can be a news event. That can be a trading room. That can be some great presenter on a webinar. You should be taking the information they give you and then deciding for yourself, okay? Never, ever rely on someone to tell you what to do, because ultimately it's going to take you down a road of failure, okay? I know this from trading for 37 years. Now, if you look at people that are trading 5, 10 years, their techniques are extremely complicated and difficult to follow. They may be seeing something and you see something else. If you look at people that have been trading 20, 30, 40 years, their techniques are extremely simple. These guys have been lasting longer than anyone, and maybe they have 3 or 4 rules. So that's the road you want to get on, okay? There's one thing I can teach you. It's just don't trade overbought and oversold markets. Keep your trading simple, okay? Now, let me see if there's any more questions. Boyke says, so are you 100% technical? Well, by technical, a lot of times people think that I just use indicators. I just use technical analysis. I don't really even consider myself a technician because I'm looking at things which I can't give away right now because they're in my course. But then, I use at most maybe one indicator. Sometimes my trading techniques only use a moving average, the 50-period moving average. That's it. We're looking for patterns. And so I don't know if I'm an actual technical trader. The only thing I can say is I don't look at things that make my trading complicated. And technical analysis can be just as complicated as fundamental analysis, okay? We look at extremely simple things. What we're looking for is that the market gives you clues. My mentor taught me that the market will always give you clues. Since this is the only thing you should be listening to the market. That's the most important thing because that's what you're going to be trading. And so that will give you clues as to what it wants to do. When you learn how to spot these clues, which are extremely simple, just jump on board, okay? So if it's giving you a clue that it wants to go higher, then you're going to jump on board and go with it. If it's giving you a clue that it wants to go lower, then you're going to jump on board and sell or go with it. But don't wait for news to tell you what to do. Don't wait for some guy in a webinar to tell you what to do. Wait for the market to tell you what to do. After all, that's what you're trading. This could be a 5-minute time frame on the Australian dollar. It could be a monthly chart of Apple. It doesn't matter, okay? When you trade the economy and use big event, don't we have to be aware of a knee-jerk reaction? Okay, this is very valid, yes. I always tell my students, you have 2 choices. If you cannot let go of the fear or the attachment you have to news events, the first choice is don't trade it. If it really scares you, if you're really frightened that you're going to get whipsawed in some market, then you don't have to trade. There's absolutely no requirement that says I must be in the market at all times. I mean, I go days without trading. If I don't have a proper setup or I don't feel comfortable, I don't trade. So the first thing is you don't have to trade. Secondly, in our courses, we teach you roughly upwards of 6 different stop placement levels. I'll go over a couple of them in the video session we're talking about. So we teach you how to adjust these stops to fit your needs. So if you feel I don't want to get stopped out, I don't want to get a large loss, you can use these different stop techniques, or we also teach you different entry techniques as well. So you feel as if, well, I'm entering too high, I'll have too big of a risk, but we teach you different ways in which to enter. So all of that is in our course. I can't really get into that right now because we have, as you saw, that video session in which people came to see me who spent hundreds of dollars. It wouldn't be fair to them to all of a sudden give everything away for free. But we are offering you a great discount where a lot of the information isn't included. So with the proper entries, with proper stop placement, many times if there is a knee-jerk reaction, you won't get hurt at all. In fact, it won't even touch you. That was a perfect example. I don't even know if some news came out, but there was a knee-jerk reaction in the E-mini today, which I was trading prior to this presentation, and I had a short signal. Now, I used one of our stop methods, and the markets spiked up, I believe, right around the opening. And if there was news or not, I don't care. I don't look at news. And I may have gotten stopped out, but because of the techniques we teach, it kept me in the trade, and I made a nice profit to the downside. Why? Because I didn't get involved in this knee-jerk reaction, and it kept me in. So there's a lot of different ways to play it. And this is what we teach in the courses. Some of this is in the training session, and this is how to trade the market. But please, your decision process should come from you. You should attain all this information, decide what works best for you, and then make your own decisions, empower yourself, okay? I know firsthand, I used to subscribe to tons of newsletters, which in our day, were similar to chat rooms and trading rooms. I looked at every news event that came out, and I also had tons of indicators. And guess what? I couldn't make a dime. I was doing everything that I had been taught that you're supposed to use. I couldn't make a dime. So if I couldn't make a dime on conventional wisdom, what was I doing wrong? Well, maybe it was what my mentors taught me, is that these things really aren't valid. What's more valid is learning how to listen to the market. Now, what I taught you today was listening to the market. You saw an edge there where the market was telling you, okay, conventional wisdom tells us we're overbought. Well, guess what? I'm going to exceed those overbought levels. So the market was telling you it doesn't care about overbought. It's going to go higher. That's what you should be learning to listen to, okay? Any more questions before we sign off here? Remember, if you're very interested about taking your trading to the next level, $37, I think most of you can, even if you're having a tough year, can't afford that. You get a lot of great information that people came all over the West Coast to see me speak in Denver. For hundreds of dollars, you can get for $37. Once again, we offer this video training session for nearly $1,000 on our website. I'm sure $37, you're going to get a lot of great information. If you like the edge I shared with you today, once again, you have upwards of 5 or 6 different edges more included in this presentation. On top of that, we give you all of the rules to a great strategy number 1, okay? So after all that, after I said about how you shouldn't listen to anyone in trading rooms, or it doesn't matter, I believe I'm getting a question, do I offer a live trading room? No, we don't believe in those things. Why? Because what most people do is they use them as a crutch. You start to think that, well, we have a trading room. See, this is what I mean by how you've been convinced that these things are supposed to work. You go into a trading room and you listen to these guys speak, and pretty soon you want to do what they're doing. This goes entirely against our philosophy. That's a crutch. We don't want you to rely on anyone else. What we do is provide you with sound knowledge that has stood the test of time that I've been using for nearly 40 years, okay? In our courses and in my mentorship, in my email correspondence with you. And then you decide how you want to package it. I help you putting that together in your own trading plan, your own trading technique. That's how we do it, okay? Our philosophy is if you go to trading rooms, eventually you're going to use them as a crutch and try to mimic what the person or persons in the trading room are doing. And I feel in my 37 years, that's not how you achieve consistency or success. You have to learn your own way. Be perfectly honest, I used to teach people in my office how to trade out of my office, and I would say that the majority of them doing the exact same things that I did lost money, okay? And I couldn't understand it. They were taking the same signals, but when it came time to pull the trigger, either they were a little bit late or they couldn't understand why a buy signal was being generated or vice versa. Why? Because it wasn't meeting their needs. Maybe they were too aggressive. Maybe they were too conservative. So you can't exactly trade the way someone else does. You have to take the same components, but put them together to meet your needs. Maybe you're not an intraday trader. Maybe you're more of an investor. Maybe you're not an investor. Maybe you're more of an intraday trader. Maybe you don't like currency pairs. Maybe you like futures. So you have to fit the markets that best suit you. You have to fit the time frames that best suit you. You cannot mimic someone else. Ultimately, it leads to inconsistency in your trading. Okay, that's why we don't offer trading rooms. We don't believe in them. It's specialist trading. We don't believe in education to empower you so that you can make your own decisions. Okay. All right, I don't want to take up much time here. Remember, once again, let me just share with you this slide here. If you're interested in taking advantage of a nearly $1,000 offer for $37, please contact us at the email provided, or you can call us directly for only $37, and you'll get the entire session plus strategy number 1 course. Okay, here's the information. Once again, you can contact the VP of Operations, Brett M. at specialisttrading.com, or simply call us directly at area code 310-844-7220. I want to thank you all for attending today. I hope and the information, the technique I shared with you will at least change your way of thinking and hopefully steer you clear of losing and try and get you on that track to becoming consistent. As you see, we give a lot of attention and detail to knowledge and to information so that we can empower you. So this is what we're all about. I want to thank you so much for attending. Thank you to the people at FXB for inviting me to speak. And I look forward to all of you becoming members of Specialist Trading. Thank you so much. Bye-bye.